Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the euro currency. So on the daily chart we actually do not have something to comment. It's mostly market stands inside the flag consolidation. Trend has turned bullish, but it's just mostly nominal turn, so obviously the overall tendency stands to the downside and market keeps bearish context here. So recently, as you could see on the background of the CPI numbers, performance was very choppy and actually mixed. So it's just as we have said that indeed CPI numbers were not quite strong, so it was larger than in the previous month, but still not as strong as market was hoping for. And as a result, you can see the mixed performance. So at the first glance it has dropped in the first time, but then everything was played back and euro currency returned right back up. Market hasn't broken any significant levels, so that probably could become an indicator of the changing of the sentiment. And in general, on the lower time frame, the market still keeps short-term chances for bulls, because on the 4 time frame charts, take a look. Grabber is still valid. It suggests taking out of this top. We've got another one. Suggests taking out of this top. Gap is not closed, so overall performance mostly keep bullish setup on the surface. Of course, we can't call it anymore as a kind of the head and shoulders, but in general, since we will get a lot of statistics and European Central Bank results, and everything can happen. So don't treat this performance that we see as some kind of the indecision or some weakness. This is not quite weakness, so this is not the actually reaction on the CPI. This is just investors are waiting for European Central Bank meeting, PPI numbers and retail sales. This is just expectation. It's a moment of when the market investors sit on their hands and wait for a data release. And as you understand, for instance, if Christine Lagarde will raise rate today, with some more or less relatively hawkish, of course, nobody expects strong hawkish rhetoric, but relatively hawkish rhetoric could easily push euro higher, especially where we'll get weaker PPI numbers today. And this is really very probable because, as we have discussed in a few recent months, in our fundamental research, we see clearly deterioration in the production sector in the United States. It means that there we have the clear deflation, and chances that PPI will show a significant rally, stands very low. These two factors easily could lead both grabbers to the target and actually put price right to the target that we have specified. It's around 107.85. This is short-term performance. Conversely, no decision from the central bank, actually some dovish rhetoric, could start downward continuation, because the balance between the European Central Bank's rates and the United States rates on the background of the better economic conditions in the United States definitely will be pressing on euro currency. Here we have the corresponding pattern. Actually, as you can see, this pattern keeps door open for both directions, but in the current circumstances, I would even narrow a bit this pattern just to minimize the scale of the observation that we're interested in. So with the first scenario of the hawkish European Central Bank statement, we could get easily some kind of the butterfly to the upside that could finalize our target. Conversely, in the statistics in favor of the United States dollar, we could get the breakout. That's why currently we could do just a couple of things. So if you have the long position, you could just keep it, because this was not bad opportunity for taking the long position, although it was a bit risky. But currently you could move stops to the break-even and see what will happen. to take a new longs position, well, it is a bit difficult because risk-reward ratio will be not as attractive and you're put under direct hit of the coming statistics and European Central Bank decision. So if you're sure that European Central Bank will raise the rate, you probably could try to step in, but that much worse placement for position taking that it was in the previous couple of sessions. For the bears currently, guys, I do not see anything to do because we do not clear signs yet of the bearish scenario. For that, we need breakout to the downside, taking out of these lows, and in general, erasing of any bullish context that we have, or we have to completion of this ABCD that we have discussed yesterday. It's around 107.85. Currently, none of these events have happened. And from the conservative point of view, it would be better to sit on the hands, especially at the eve of the important statistics. Of course, if you would like to anticipate this, you could try, but you should understand the consequences that might happen. Finally, the tool that we sometimes use and recommend to use is using the stop sell orders, for example, below 107. Not step in the moment if market will start breaking down. Theoretically, it might be used, but I do not like this to use it in the moment of the important statistics release, because some occasional emotional spikes could just trigger your stop and you will be in the wrong direction. So this will be not very pleasant moment, because that's why I prefer to use the stop entry orders only on a calm market when I do not have any important statistics. And when I know that the breakout will be purely based on the technical factors rather than some emotional and gambling on the important statistics releases. So in 2 words, that's what we have currently on euro currency. Let's keep watching how it will go. Just at the bottom line, bulls could keep positions with the break-even stops. Bears should wait and sit on the hands and see what will happen on the data release.